This was a big day for the markets. We got fresh insights on inflation and on interest rates. We're so happy to have Mike Giordano with us to break it all down. Financial advisor with Williams Wealth Management. Mike, on the money. Let's start with inflation. Since the Fed's actions, today they're saying we're going to only raise it one time in the year. We're not going to mess with it right now. The consumer price index numbers a little cooler than what was expected. Prices didn't change much in the last month, up 3.3% in the last year. All of that is good news, right?
Yes, absolutely. It is good news. And Jane, if you went and were at the pump, you saw gas prices have come down. That was a big contributor to the fact that inflation held pretty much steady over the last month. The real good number of the inflation, though, was the core inflation, because that's really the predictive element of like where inflation's headed. And over the last 2 months, it's really stepped down. So if you remember the first half of the year, it wasn't all that great. Last 2 months, we've gotten pretty good. The Fed, though, doesn't expect much change for the rest of the year simply because of base effects. And so they expect it to kind of hover out in this range.
Okay. Well, the Federal Reserve, as expected, said they're going to hold short-term interest rates unchanged. Not going up, not going down. We've been above 5.2%, though, in the last year now. Will the cooler inflation data speed up that rate cut? Possibly. Possibly.
If we got to get more.
You don't want to really make that.
No. We can't make definitive, right? And who knows how the economy plays out.
Exactly.
But really, Jane, what they need is more of the same. So today's number was great in terms of inflation. They just need to see that continue to happen for another few months. Jay Powell today wasn't committing to any kind of move, whether that's in September or December. He's basically like, let's get more of this good data. The interesting thing was that for a while they've been thinking they're going to cut rates 3 times this year. They dialed that back to about 1 cut this year, pushed some of that into 2025. So it looks like these higher rates are going to be here for the foreseeable future.
And you have said to me before, 3 times 1 time, they'll make their decision when they make their decision.
They're data dependent.
Yeah, okay. So the borrowing costs peg more off of those 10-year Treasury bonds. What are you seeing with those rates, Mike?
They're all over the board. I mean, they're bouncing around like crazy. It's like a little ping pong ball. Just in the last couple of weeks, they've gone up 20 or 30 basis points, so that's like 2 or 3/10%. They typically don't move that much, but that's the 10-year Treasury is basically what's driving a lot of consumer debt and even business debt. So if you're taking out a mortgage, that 30-year mortgage is pegging off of what those longer-term bonds are doing. So they're bouncing all over the place, and that means that those mortgage rates are bouncing all over the place.
And that's really where people are plugging in, right?
Right, and that's when people are trying to get a 30-year Treasury or a 30-year mortgage rate down. What they're really needing to get down is that 10-year Treasury note to get the mortgage rates down, and it hasn't really been decisively moving one way or the other.
Okay, so your mortgage, also your 401k. The markets cheered today's inflation news, pushing stocks to record highs. Once again, what's behind that? Just yay, they're not going to do anything bad?
Well, the market's very excited that it doesn't look like rate hikes are on the table, right? That's great. In terms of rate cuts, they want to see rate cuts, but the market really hasn't necessarily cared that we've been pricing out all these rate cuts, because what's happened is that the market's running off of the belief that we're going to continue to get higher and higher earnings growth, and that earnings growth is supposed to be above trend, and so it's really the big mo. You had a big politics day yesterday. The big mo drives things in the markets as well, and so when momentum takes hold, it can really power the markets, and right now that momentum is driven a lot in part by AI and all the excitement around AI. So any stock that's tied up in AI, we're thinking those big mega cap tech stocks, they're doing phenomenal. The rest of the market is kind of chugging along, and you see the same thing with consumers, right? Wealthy consumers, they're doing fine with inflation. It's the rest at the bottom they're struggling.
Well, that's interesting, that little AI note right there. It's always so wonderful to get to see. Mike, thank you so much.
To drop interesting nuggets.
Come on. They are also, and just to kind of follow what the Fed's doing. It's funny, like, here's what they did today, Mike.
Yes.
Thank you.
And by the way, the humidity really, it is affecting all of our hair.
Yeah, I know. The curls are looking good for you, though. Mike Giordano, thank you so much.